What's up, everybody? Wendell Butler here with Envoy Mortgage, working out of Medway, Massachusetts. Today, I'm going to go over just a quick tip with you, a difference between a pre-qualification and a pre-approval within the mortgage industry. Especially with the real estate market booming right now, it's important to understand the difference between the two, especially how competitive the market is. So first, a pre-qual. Pre-qual is when, say, you fill out an application with me, I'm your loan officer online, and you fill out just the basic information. So you're telling me, about yourself. You're telling me how much you make. You're telling me how much debt you have. I pull your credit so I can see your credit scores, and then you're telling me how much money you have in the bank, in the stock market, in your retirement funds. I'm going to take all that information and I'm going to input it into my system. And what's going to happen is we're going to run an automatic underwriting system. So the computer just automatically underwriting it based on Fannie Mae and Freddie Mac guidelines, and we're going to see if you are approved for the amount of money that you're looking for a loan. So say you're looking for a $300,000 loan, you're going to put down 10%, and you just give me the information through the application. I run it through the system, it comes back, and it says you're approved, eligible. So that means I can give you a pre-qualification letter, basically saying that you're pre-qualified for the $300,000 loan with 10% down, pending interest rates and pending any further information that you give me. So a pre-qual is really just verbally. It's not really diving deep to see if you're approved for a loan, but I'm going based off of your credit scores, what you verbally tell me you make, and how much money you have. Pre-approval is when we actually dive really deep into your financials, and an underwriter actually looks into all the paperwork and documents that support your financials. So you're gonna upload pay stubs, you're gonna upload bank statements, you're gonna upload asset statements like retirement or stock investments. Maybe if you own other properties, we're gonna look into that. If you get rental income, it can get really you can push the limits with how much you make for income. We'll look at your credit scores and report your debt, and we're going to input that all into your application, and I'm going to send it to an underwriter who's going to sift through all the information and tell me if you are approved for that loan. So what this does is this sets you up for much stronger offers in the market because the underwriter already pre-approved you, and pending any changes, as long as you don't do something crazy like go get a new car loan or open up a ton of credit cards or get some type of loan that impacts your financials, you're going to more than likely get approved for that loan. So if you put in an offer with a pre-approval and a seller accepts you, it's going to be a much more seamless process because you're already approved. You might just have to upload a few more documents to update your loan application, but it's going to be a much more smooth process compared to a pre-qual that hasn't been underwritten yet. And who knows, say they underwrite it and then you provide a ton of documents, it actually can't be approved for the $300,000 loan. They find something that limits you from being able to attain that. So a big thing about that is that when sellers are looking at offers, they're going to look more into pre-approval letters and offers rather than pre-qual because they want an offer that is going to be seamless and going to go through smoothly. So even if you're offering more with a pre-qual, they might accept a pre-approval with a lower offer because it's just much more safe, and they know that the process will more than likely, go through, and they'll be able to sell a home. Rather with a pre-qual, they could be scared that say they are 2 months to the process, and then bam, the person or whoever is trying to buy the property with a pre-qual, all of a sudden can't be approved for the loan, and then the deal falls through. So a good way that you can relate this to is say you're going scuba diving with friends. Everybody with pre-approvals gets scuba gear. Everybody with pre-qualifications just get snorkeling gear. You're going to have a lot more fun, and you're going to have a lot more experience and be able to dive deeper and see a lot more with the scuba gear or the pre-approval. With the pre-qual, you're just going to really get to see what's on top. You might get to see some cool stuff. Who knows? I mean, you could get an offer accepted if you relate it back to mortgage, real estate, but pre-approvals just have that upper hand on you. So yeah, that's basically the main difference between a pre-qualification and pre-approval. In the market today, you definitely want to get a pre-approval. They do take about a week usually. A pre-qual could, a pre-qual you can get like in a day, but it's just much more worthwhile to get a pre-approval, and you're going to be much more happy, and your offers will be stronger. And I guarantee that you'll find a house faster with a pre-approval than with a pre-qual. Yeah, that's it. If you like this video and you like the information that I gave, give it a like, and you can subscribe to me. I'm going to put my information below as well, so if you have any questions, you can always reach out to me. I'm going to keep doing these quick tips once a week, just around real estate and stuff. So if you have any ideas or want to know about anything, just post it in the comments or let me know, and maybe I'll post a quick tip about it. Thank you so much for tuning in, and have a great rest of your week.